JB Knowledge Podcast Network. On episode 34 of the Insurtech Geek Podcast, talking about machine learning's role in insurance with Zehra Cataltepe from Tazi. The Insurtech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific technologies we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Back in a second. The hurricanes have passed in Texas for now. We have clear blue skies finally after a week of rain here in central Texas, and it's a gorgeous Friday here. As we record this, it's Friday, September 25th, 2020. That's right. This dumpster fire of a year is getting close to being over. We're almost in the fourth quarter of 2020. Definitely not the year any of us thought it was going to be. We had to modify all of our one-year goals and do all kinds of adjusting, but that's okay. We will survive. We will survive. And with me, of course, as always, my co-host, the illustrious Rob Galbraith. Rob, how's it going?
It's going, man. It's going. I guess that's the answer every week these days. So good to see you again, James.
Good to see you too. Good to see you too. We're glad to have with us from the beautiful state of California, little smoky state. Everything kind of probably has a smoky smell right now. All those forest fires over there. It's been quite a wild ride the last few weeks over in California. With us from California, Zehra Cataltepe from Tazi. Zehra, so good to see you on the show today.
Good to see you guys too. Very happy to be here.
Yeah,
and I look forward to more sunny skies here and blue skies in California, obviously.
Yeah, no more orange skies, please. I mean, it looked like the apocalypse sometimes when the smoke was in the sky, and we of course, everybody on the internet saw those pictures. You are in the Bay Area, is that correct?
Yes. I'm in Los Gatos, so we have seen red suns, and the first time I could take the blue sky picture, I shared it with everyone. Look, the sky is blue today.
Yeah.
So for the last couple of days, we have been getting out, seeing the blue sky, thanking God, and returning back to our lives. So we didn't know it was such a blessing before.
Exactly. It is a blessing. And you are in such a beautiful part. I mean, Los Gatos is like right there at the gateway to get down to Santa Cruz and to go down to the coast and go see Monterey and Carmel. And I mean, I absolutely love that part of the country. My great aunt lived in Carmel most of her life, and so I'd go visit her in Carmel by the sea. We go to the Monterey Bay Aquarium. I mean, such a beautiful place.
Definitely, I totally agree. I one of my favorites is Capitola. I hadn't ever been there until a couple of months ago, and just lovely little towns here and there. And Carmel is one of the most famous ones, but every one of them is unique. So definitely worth seeing. And there is always almost a 10-degree difference between like inland and the beach.
Yeah.
And beach is actually warmer during winter. Did you know that?
Yeah, the ocean moderates the temperatures there. It's wild. I mean, the closer you live to the ocean, you actually get a more moderate temperature, but it's still not exactly an ocean you'd want to go for a swim in without a dry suit or a wet suit on. It gets a little cold there. California's been in the news a lot lately for forest fires and all kinds of things, but this week was in the news for something that was really interesting and really impacts insurance. I'm actually going to start with this, and we're going to jump into the show because I feel like it's so timely. The governor of California, Gavin Newsom, announced that by 2035, all new cars have to be electric. No more combustion engines allowed in the state of California 15 years from now. And then they said that the freight and the larger vehicles will be 2045. So 15 years for the passenger cars, and then another 25 years for the larger cars. But this is a pretty major. California can add 38 million people, pretty large consumer market. So it has a big impact on the plans that large companies make. Zehra, this had to be a topic of frequent discussion there in California.
Yeah, I mean, but my question is, why wait that long, to be honest with you? I mean, like one of the things I see, I think after COVID, we realized that we don't really have to impact the environment this much. I mean, so I mean, I think we are even later than where we should have been, and I see a very similar trend in AI. So just because we have GPUs, TPUs, people think that we can just irresponsibly create thousands of models that we don't need, and we should just not do that. I mean, we should be just responsible to the environment. And COVID has shown us that actually we can live by consuming less. We can live by polluting less, and I hope we actually do the electric cars even earlier.
Yeah, it'd be nice. Certainly, there are some use cases that this law, of course, the law of unintended consequences, will drive some challenging effects, like people who drive several hundred miles a day. There is not an electric car in the market that will work for them, and so there's got to be some accommodation for that. But and I imagine the value of used combustion engine cars in California will go up because of the people that need those. But there's going to be all kinds of interesting things that occur. I agree. I typically like to let the market play out, but in some cases, you have to nudge the market along to move on to its next step in the evolution. And I love electric vehicles. I think they're fantastic. They're absolutely amazing. I'm watching a really great series right now on Apple TV. I promise we're going to get talking about Insurtech. Although this impacts Insurtech because electric cars typically carry with them automation packages that will drive automotive insurance rates down. And we can talk about that in a minute because that's directly tied to machine learning and AI. Great series on TV right now on Apple TV Plus with Ewan McGregor, the famous Scottish actor who, of course, from Star Wars and all kinds of other movies. He's riding with his buddy. He did 2 other around the world journeys, but this one's from the southern tip of Argentina and Chile and Tierra del Fuego all the way up to Los Angeles on 2 electric motorcycles that are prototype electric motorcycles Harley Davidson built just for the journey. And they're using 2 Detroit built. And this was the cool tie into Michigan, Rob. They had 2 Rivians, which are the all electric truck that's built in Michigan. So Rivian delivered VIN number 1 and VIN number 2 for this movie. And Harley Davidson delivered VIN number 1 and 2 of their motorcycle. And so they went to Milwaukee and they went to Detroit. And they picked up the vehicles and they shipped them down to Tierra del Fuego and they installed charging points along the way. And they're doing all electric all the way from Tierra del Fuego all the way to Los Angeles. Wow. Yeah.
Cool.
Yeah, it is super cool. They ran into some pretty big problems in parts of Argentina and then they document how they dealt with it. I mean, it really, really fascinating view of the future of electric vehicles. But we talk a lot about electric and automated vehicles because it's going to have a massive impact on auto insurance. Before we get into that, remember that you can subscribe to the Insurtech Geek podcast by texting Geek Out to 66866. Make sure you never miss an episode. You can subscribe to our weekly emailer and we'll send you the show notes. We transcribe those and then we send you the link to the video because we're video now, by the way, if you haven't watched the video. And then we have our audio episodes. Back to you, Zehra. We're going to talk about Tazi AI. We're going to talk about how artificial intelligence and machine learning is impacting the insurance space. Before that, I want to have a brief discussion about you. You have a really interesting background. You grew up in rural Turkey. And then you definitely are very well educated, went to comp engineering at Belkent University, and then you got your master's and PhD in computer science from Caltech. Just walk me through growing up in rural Turkey, family of farmers. What led you to computer science and what led you to Caltech and Insurtech?
So I had a father and mother who just believed in me. So I mean, whatever your income level is, if you just let your children be and if you trust them, they will do just so many great things. I definitely believe in that. So they always told me, do what you like to do, and if you fail, we are here. So that confidence was just so great. And I chose computer engineering. I could have been a doctor. I just couldn't memorize stuff. So I have such a horrible memory. My mom wanted me to be a doctor and to help people. But I just said, I can't do it. I can't memorize stuff. So I decided to become a computer engineer. I really loved math. And I chose AI during my BS project years because I had great role models who loved what they were doing. And I actually wanted to have an AI that was like human. At those times, there was Japanese fifth generation project where people were using rule-based models, to mimic humans, etc. And then I came to Caltech. I worked with Yasser Abu Mustafa, who's one of the pioneers in machine learning, and his love for AI also was so inspiring. Then I worked in industry. I moved to academia, and then we established Tazi, and with Tazi, the machine learning solution that we provide is such a perfect fit for insurance industry. We chose insurance for that reason, and I can talk more about that later.
Yeah, well, we can chat about it now. I mean, tell me what Tazi does. Like, what exactly would you say that it does? Right? It's AI. Okay, well, AI is a super giant, broad, massive umbrella that can apply to just about anything in computer science at this point, right? I mean,
yes, to anything.
Yeah, and really, we're not talking about general AI. You're not developing general AI. You're using specific forms of AI, specifically machine learning and other techniques, to solve specific problems in insurance. Because general AI, for those of you who don't know the difference between general AI and specific AI, general AI is we're thinking like HAL from 2001: A Space Odyssey, right? I mean, you have a sentient computer that is functionally self-aware, can learn, grow, think, like a human. That's not what we're talking about. And whenever we talk about AI, that's not that's by many people's estimates 20 to 30 years in the future. As far as we know, it hasn't happened yet. And so really what we're dealing with right now is specific forms of AI like natural language processing, image recognition, speech processing, text to speech, speech to text. I mean, you name it. Sentiment analysis is really common. Reading free text. I mean, there's a lot of different forms of specific AI, and machine learning for our listeners is when you teach a machine to learn rather than explicitly programming every potential outcome. So Arthur Lee Samuel in the 1950s and 60s was one of the pioneers of machine learning, and really taught. And he was one of many people who worked on this, but he taught a machine how to play checkers against itself, and then it used those games to learn how to win, and then it played the world checkers champion and won. And so those are kind of the seeds of machine learning. So walk me through what Tazi does, what specific forms of AI it uses, and what platforms it sits on. Let's get technical.
Sure. Okay. So we established Tazi in 2005 with my co-founder and my husband, Tanju. So I told him, I don't want to establish a company with you because, I want you to be my husband, and we might have fights when we established this company. For the last 5 years, we didn't have any fights, but, we created this great technology, which was inspired by the problem of adaptation. So think of COVID-19. Machine learning systems, as you said, James, so they learn from data, right? And the machine learning systems that we are talking about in insurance, they are not just differentiating apples from oranges or, cats from dogs. They are trying to differentiate risky customer from not risky customer, the loyal customer versus the customer who is about to leave you. So those are changing concepts. So we realized that in real industry, solutions were being deployed, and people used a lot of data science resources, business resources to have those deployed solutions, and solutions could not live long because life changed, and it took as much effort to update a solution as to create one. So we decided to establish Tazi as a self-maintaining AI system, a system that is deployed and can learn from the data in many ways automatically without needing lots of cranking. So we
and by that you mean not a ton of human intervention in the way of hinting, having people hint and train, and that's what machine learning algorithms have kind of become famous for. Is you have hundreds of people in offshore offices constantly hinting all these systems and then supplementing them. That's not what we're talking about with when you refer to auto ML.
Yes. So AutoML, AutoML concept, hinting is actually good, and I'll tell you why it's good in a minute. So AutoML platforms are for data scientists. Okay, so they are aiming to make the data science tasks easier. But we realized after having this continuous learning technology and deploying it in customers, we realized that it was just not enough to work as data scientists because insurance is such a complex business. As a data scientist, I might say, by the way, I'm a data scientist person. Like I'm just a technical person who is learning insurance. Okay, so I might make mistakes. Correct me. Rob is here as the insurance expert, and you are here. So I will make mistakes. Okay, but what we realized in insurance was, as a data scientist, you might find a solution, but that solution might not be serving your return on investment. It might not be serving the business KPIs, and the business KPIs change. Today I might want more customers. Tomorrow I might want less risky customers, or I might want customers who want to use my new product. So while those KPIs changed, and while the data that the customers produced and what they wanted changed, it was just impossible to have an AI system that worked only with data scientists. So our customers started asking for, hey, I want to understand how this AI works. And these people are insurance professionals. We are talking about underwriters, pricing experts, sales and marketing experts, not necessarily data scientists. So they asked for explanations. And on a Sunday morning, I came up with this. We are using some open source tools, and I was able to interleave our continuous machine learning with explainability. And I still remember that morning. I'm like, hey guys, look, it's so beautiful. I don't have time. I would love to show it to you, and I want Robert Downey Jr. to use our explanation models. It really looks like Iron Man.
Nice.
So if he hears me, my wish is to have him use my models, our models one day. So we are actually turning every insurance professional into Iron Human in the sense that they are empowered because they are able to understand machine learning. And then we realized after the explanation came, hey, I understand this, and you know what, I can make it better because you are using these features, these variables in your model, but I know the other variables that can contribute. And then, you are making mistakes here. You shouldn't include Porsches in that risk model, for example. So when insurance professionals saw how models worked, we realized that they could help in three different ways. Define very timely business KPIs and make sure that they are being followed by the models, monitor them. The second one is during model creation, fast forward the process by pointing out to what should be used in terms of data. And then the third, actually to help the models learn better. So what you are describing was a negative thing, but what we are doing is a positive thing. For example, if I know that restaurants will be closed in a certain area in town, I might actually suggest some rebates, or actually maybe even increases in insurance premiums based on whether delivery is more common or not in that area. And models don't know that yet because there is no data generated yet for that. So the insurance professionals are actually able to, underwriters are able to intervene with the models when there is no data. So we call this learning from past is batch machine learning, which is the state of the art in insurance right now, and in machine learning. What we are doing is learning from today with continuous learning. And if you put those, 30 years of, tens of years of experienced insurance professional with the models, you get learning from the future. And that's just so exciting, like having that whole loop. So we are our vision is to have not just data scientists, but insurance professionals themselves using machine learning and being in the process so that models are useful, not just from the beginning, but all the time. And it's a very difficult And insurance professionals are really the perfect match because their life depends on predictions. Because they have been predicting, they have been dealing with data and models all the time. So they are the perfect fit. And insurance is such an underserved sector in terms of AI. They are ready, and we are making data scientists more efficient and insurance experts involved so that models are working all the time. And if they are not working, you know that they are not working, and you know ways to make them better. So yeah, I'm just too excited. Sorry about that. So if I start talking about this, I'll never stop.
Rob?
It's good for a podcast. Yeah, it's Zehra, it's great to see you again. And I wanted to know just a little bit more on your background, coming from the world of academia. And then, you talked about you really wanted to make this practical, you wanted to make this accessible, and you decided to go the route of a startup rather than, go work at an insurance carrier firm. So maybe just talk a little bit more about how you made the transition. And then, I'm sure in academia, because you have such a foundational and theoretical knowledge and you're very steeped in AI, you've talked about the opportunities in insurance. So I'm just kind of curious a little bit more, like why insurance versus, some other sectors, which of course AI has applicability in a whole lot of different industries.
Very good question. So first of all, like I'll answer why insurance, and then I'll answer why not academia. So I love being an academician. I mean, my advisor Yasser used to tell us, hey, I'm having so much fun and they are even paying me for this. So I feel the same way when I interact with my students, with my thesis students doing research especially. However, when you do academia, you are more or less in an experimentation and research phase. And as Tazi, we are involved in 2 European Union projects. One of them is on digital twins. The other one is on explainable AI. So that research, I think, has to always be with a startup because we are racing against huge elephants, like billions of dollars of worth companies are our competitors. How can we survive against them? Research is the only way. I mean, we have to always be doing the state-of-the-art research. Our advantage as a startup, as a research enhanced, research superpowered startup is because in our team we have people who have research background and also applications background. So we are able to come up with an idea and actually bring that into being a part of our solution in a very short time. So we can listen to our customers, we can identify what the problem is and how we can solve it as a product or using what kind of AI. And we are able to implement that in a very short time. And we can do that only because we have research as well as development. So and the excitement of seeing something that you do being used by an insurance professional and getting that praise is just so amazing. So writing papers as an academician, doing projects is just so awesome. And I have done very rewarding work. I have worked with students with ADHD and autism, for example. I have done very interesting stuff, but having what we have done, like being used by people to improve their business processes, to improve their understanding of their customers, and seeing that light is just so rewarding. So that's why we did this transition from academia to being a startup. And I did work in huge companies. I mean, like I had worked at Siemens Corporate Research. My husband and co-founder, he worked at Bell Labs for many years, and those are great institutions, but they are institutions. I mean, it's hard to see what you're thinking being a part of your product and being used in a large institution. And a startup gives you exactly that. You can see the problem and solve it in a week. So wow. I mean, like this is like super super empowering. I just can't exchange that with anything else right now. In terms of insurance, it took us such a long time to find insurance. We started with, believe it or not, telematics actually. We also thought about gaming industry, computer games, and then it was just hard to develop business and to find real business value there. With insurance, on the other hand, we found great traction. So we have two customers in insurance, two European international insurance companies, and for them, they signed up right after COVID, and we have been able to increase their revenues because of our customer retention solution. So there is such a great traction and such a nice fit, both in terms of the difficulty of the business and hence the need to include business in the solutions, and also the continuous change and hence the need for a self-adapting model. So for that reason, it's a great fit. But insurance is the first industry that we are solving problems in, and finance, for example, manufacturing. These are all very interesting, and healthcare. These are all very interesting other verticals. But we're a startup. We have to concentrate, and insurance, we found good traction and a very nice fit. So we want to keep doing this.
Yeah. So Zehra, let's break it down to simple terms. An insurance company signs up with you. Let's say you say that you have auto insurance, life. So you have auto insurance, profitability and growth. Yeah, profitability and growth detection, and you have claims prediction, and then you have life insurance claims prediction. Those are the three main service lines you have listed on your website, at least. So walk me through. I'm an auto insurance company, and I call up Tazi and I say, please come help me. What's it going to look like for them to work with you and your tools? And then what's the end result for them? Like what's the let's just talk about outcomes. What's the problem they're experiencing that leads them to talk to you, and what's the outcome when they're done?
Yes, sure. So first of all, as I said, we did more than 30 use cases, and we are listing all our use cases on our website, and those are use cases with customers. But right now we are concentrating on especially auto insurance and for auto insurance customer loyalty. So we are talking with especially mid-level insurance companies, and there are a number of pain points. One of them is customer retention. So they have a lot of problems with customer retention, especially post-COVID. And we should say during COVID. Unfortunately, COVID is not post. So during COVID, they see lots of customer retention problems. So we have an initial conversation. We show them our demo, and then business always has to be included in the process. We cannot just be talking with the BI teams. So we have this 3x3 solution. If your data is machine learning ready, in 3 weeks, you have a solution, not just a toy model. You have a solution in 3 weeks where you can see the results, whether there is predictability, and you can also see whether there is a return on investment. Because return on investment requires some kind of a prescription, right? So I can't just sit down and cry if my customers are leaving me. I have to have some set of actions. So what can you do if your customer is leaving you? Well, you can see if you can give some rebates, as most insurance companies are doing right now, or you can see if you have new products to offer. You can see if there is a mismatch with the agency, and you can also take a look and see what your competition is doing, and see if you can offer even new and better products. So we are able to actually keep the pulse of the customer with the customer retention model, and then the actions that can be taken by the upsell, cross-sell models, price elasticity models, and so on. So in 3 months, you would have a deployed solution with the ROIs in your hand. So that's what we are offering.
and you have a deployed solution that helps you make better decisions on claims when they get intake. So you have an auto claim that's intake, and you can set the reserve better. I mean, is that the end outcome? Is you're going to do a better job on reserve setting?
I don't. For we are not right now. We are using claim risk prediction as a step in our customer loyalty solution. So our claim risk predictor just aims to say whether Zehra is a risky customer or not. So only if the risk is less, you should be offering stuff to your customer, because if the customer is a high risk customer, then maybe you should rethink on what you need to offer. So I'll give an example in terms of customer loyalty. So if the customer is going to leave you, what are the things that you can do? I'll ask Rob, because you guys are the insurance experts more than me. So based on a different states, right? If you are in Michigan or if you are in California, there are different things that you can offer to your customer if the customer is going to leave. So what are they? So I mean, you cannot always give a reduction. You cannot always give a rebate, right? Or you cannot reduce the prices because some of the things are regulated. But you can. The customer retention model tells you why the customer is leaving you. Is it the price? Is it the experience with the product? Or is it the agency? Those are things that we have seen so far as root causes of why the person is leaving you. There might be other things that we will see, but those seem to be quite prominent right now. Does that answer your question, James?
Yes, absolutely it does. I mean, we're trying to understand, because I think this can be kind of mystical for some people when they're trying to understand exactly what value it adds and where, why should they use it? It's not just for marketing. Like there's real practical return. There's real practical return and value in utilizing machine learning to do things that humans just don't have the time to process. Rob, your thoughts?
Yes.
Yeah, just to add on to that. So this problem is very interesting, particularly on the customer loyalty. Based on previous experience, I've learned a few things over the years. Number one, the people that complain aren't always the people that cancel, which is very interesting. And so oftentimes companies will actually spend a lot of time trying to, help those that complain, right? And take care of them, right? They don't want them to leave, so they'll threaten to cancel. But actually, those are not always the people that cancel. Sometimes the people that cancel just walk away and you never get a chance to talk to them. They never complain. They're just gone one day. And so you don't know that. And so knowing that those are actually two different profiles, that the people that complain are not necessarily the people that walk out the door, I think is important to know. The second part is, to Zehra's point, you kind of have, and this is very crudely defined, but you have people that are loyal that will be with you unless you price them out, right? You raise their premium enough, and it's not just raise it, but raise it by a certain amount, generally 10% or more, I think is what I've seen, or they have a bad claims experience. And unless you do anything to kind of drive them away, they're going to be with you because they don't want to shop their insurance. They're, generally happy, whatever. Then you have people that are always looking to save a buck. So they're constantly churning. So for example, when I worked at USA, one of the things that was tough to get your mind wrapped around was we lost the most members in auto insurance to Geico. And so we're like, oh, Geico's a really tough competitor, government employee insurance company. They actually were started by a former USA employee way back in 1936. So, that was kind of alarming. And then if you say, well, who are we taking the most customers for? The answer was also Geico. And so what you start realizing is that, actually, there's people that churn, that kind of switch every 6 months and go from one company to another. And you can spend a lot of money chasing these people. We know customer acquisition cost is super high. It costs 6 times as much to acquire a new customer, if not more, than it is to retain an existing customer. And so when you start chasing these people that are going to churn anyway, right, you end up spending a lot of money. Whereas those loyal people, you kind of take them for granted, all right? And again, those are the people that may be walking out the door tomorrow that you don't even recognize. And so understanding the nuances of those patterns, being able to leverage the AI that Zehra's talking about, I think does have a tremendous value. So Zehra, we met in Istanbul last year at the Global Insurtech Summit, and you were part of the, Insurtech Hub. You were one of the startups that presented there. And then obviously you've moved from Turkey to California. Early this year, we even talked about, where's a good place for you to locate. And obviously you have a history in California, which is great. But I know that you're also part of the Alchemist Accelerator in Silicon Valley. So maybe you can just talk a little bit about that journey, kind of the startup community in Turkey. There's several great startups that are there. Why you decided to target the U.S. market. You've talked a little bit about it, your success in the EU market. So just tell us a little bit about that journey over the last 18 months.
Sure, sure. So we, by the way, I just love California so much. So we always wanted to be here, but I guess there's always a time for things, and we this was the time. So obviously Silicon Valley is just such a great place to be as a startup, and if you can do it, you should be in Silicon Valley as a startup. I mean, you should not be in Chicago, you should not be in New York, you should be in Silicon Valley. I'm so
fighting
sorry,
words. But you should be in Texas, or I hate to break it to you. But
I have lived in New Jersey. I spent a couple of months in Chicago. Come on, guys. I mean, the dynamism, the whole, like from the mountains, this whole valley is pulsing, even though there is COVID. I mean, you just like, oh, I'm a product manager. I have done installations to companies, blah blah. I mean, like you can just talk with one or two people, and you'll find a team in such a short time in Silicon Valley. Being a startup, you need a great team, and it's really all about human power, right? Because we have a product, but the product happened because we worked with great people up to now, and Silicon Valley has the best resources in terms of professionals who know how to create a product, how to sell a product, how to make a product useful. So for that reason, I'm in California, and Alchemist Accelerator. I mean, Ravi, Danielle, those people. I just don't know how to thank them because in the middle of COVID, they are like the sun, because with COVID everybody were home. It was just so hard to reach out to people, to investors, to customers, and with their mentors, their the connections in Vault. Like we have access to almost 30,000 people who are great experts in very particular things, and I can have a meeting with them in just a week. Within a week, they will give some time to me because I'm from Alchemist. So that's just such a huge opportunity. I couldn't find it anywhere else. Like nowhere I could find that. So yeah, that's why we are here, and we are seeing lots of interest in insurance companies, especially mid-tier insurance companies, because while the big guys are saying I have hundreds of millions of people's data, and I guess some of the customers might not be present anymore, but I have 100 years of data. I have 150 PhDs in data science, and they still need continuous learning because they don't have it yet. But the mid-tier companies, they are really bleeding out. Like they need a solution yesterday, and we are able to deliver that in such a short time. And our deal is really clear. Give us 3 weeks. If you don't see anything, money back guarantee. So and I'm learning how to talk that talk as an academician. So I'm learning, but there is clearly a need, and there are such agile and wise insurance professionals out there who know their customers, who know their local customers. This is like Amazon versus your local shop, and they do know what the customer needs, and once we have that matching, I'm sure we are going to create great value. So yeah.
Well, all right. So bold words from a new Californian. Yeah, we'll have to challenge you.
I'm not a new Californian.
We'll have to
a long time. Come on.
We'll have to challenge you with the sheer number of defections to Austin, Texas from Silicon Valley. But that's okay. That's okay.
I have friends in Austin, Texas. I have friends in Arizona, and I love those places too. Sorry, I didn't mention those places. Sorry, guys. Okay.
Yeah, but it's not. Look, I love going to Silicon Valley, and it's wild because you're just driving up and down the highway, you're like, oh my gosh, it's literally every tech company that you work with.
Yeah.
But so let's
like being in an REM. It's like being in an REM concert. You can take it a little bit, and then you need to go to the coast, get some rest, and then come back in.
Exactly. Well, let's wrap the conversation by talking about the future, because right now you're focusing on the insurance business. You have auto and life. Let's talk about 2 years from now. What's the big stuff you want to work on in the next couple of years? Let's finish up by talking about the future.
First of all, insurance will be disrupted. I mean, it is being disrupted. There were things like UBI, connected mobility, and those were things that people talked about. And we were just thinking they would be here one day. And they are here much faster than they would have been if COVID didn't happen. So I think, insurance industry will be disrupted, and we are going to have more interesting data, and we are going to be facing with a lot of different issues that we haven't faced before. So our claims process will be different. Our fraud processes will be different. And our customers will require us, to insure in different times and in different places, and even under different scenarios. Like think of Uber drivers insurance, think of the scooters. So we will be able to actually compute risk for a person, who rents a scooter somewhere and then stops some other place, and hopefully COVID will be over and tourists will be back in New York. So another tourist will pick up that scooter, and we want to insure that tourist as well. So we will need to insure people under very interesting scenarios with different vehicles and with different people. So we will need to create new solutions for insurance, and I'm hoping to be a part of that. I believe our ability to make AI or machine learning a commodity product, just like there are so many engines that are in this room right now. They are doing their work, and I don't even know their presence, but somebody put them there. So the insurance professionals will find the pain points in their processes, and our aim is to be able to help them answer their questions in a very short time, as opposed to months, in weeks, in days, in hours. We are going to be able to create solutions for the predictive problems, and they are going to help make better decisions. Another dream I have is enterprise-wide AI for insurance. So as opposed to, lots of data means privacy and security issues with data. So people don't want their data to be shared. The problem with UBI and telematics is, if you get my data, how do I know that it's going to be used not against me but for me, so to benefit me, right? So we want to have reshareable models as opposed to data. So across different insurance business units, for sales and marketing, for finance, for underwriting, there will be different models, and those models will talk with each other as opposed to data. And that's a huge vision. So this will mean communication within the insurance company without being scared of who shares what data, because models are much easier to explain. They have much less risk than sharing data, because with the models, you know what they do. If you have explanations with the model, then what you're sharing, and not only within insurance companies. So this is really just breaking down the silos, like having much clearer communication for the benefit of the company, not just for a department, for the benefit of the whole company. Sharing models is my vision, and another vision is to have users know what they are sharing. So if I have my sensor data on my car, maybe I don't want the sensor data to be shared. I just want some predictions about my behavior to be shared, and I have control over what's shared with me, about me, with the insurance company. So things like edge computing and having more lightweight AI, more environmentally responsible AI. These are all things that we are addressing right now. We have the technology to address it. So continuous learning and explainable AI and human in the loop, those three technology advances will lead to huge things. And those are just some of them that I can think of right now. But, people like you guys, I'm sure you have more vision than I do. I'm just learning insurance, and you guys are disrupting insurance.
No, we're all in the same boat together right now. But it's been a really, really great discussion. We do need to move on to our news, and Rob's got some good news stories. I've got a couple, and so Zehra, just stick with us for a second. We gotta cover this and then wrap up. But Rob, what do you have and by the way, Zehra, thank you so much. Awesome conversation. Really, really enjoyed this, and we're gonna just have a quick chat with you about what's going on in the news. Rob, what do you have going on this week?
Yeah, no, really excited about your vision for the future, Zehra, and what you guys got going on at Tazi AI. So thanks for joining us. So yeah, just a couple of quick news hits from the week. Probably the biggest news item this week was $250 million Series D for Next Insurance. So congrats to Guy Goldstein and the folks over there. Big news in Crunchbaits and other outlets. And there was some talk about kind of following in the footsteps of Hippo and Root, and talk about the Lemonade IPO. So we've kind of seen this movie before, but yet another success story for kind of Insurtech. So definitely check out Next Insurance. And then there was a report in the Insurance Journal this week that was neither confirmed nor denied by representatives at MetLife that they are looking to sell their P&C auto and home insurance business. And this is a really big deal. Obviously, MetLife, really big in the life insurance space, as you might imagine. Actually recently acquired a pet insurance company or launched a pet. I don't remember exactly how it works at the beginning of this year. So it's kind of interesting that you're introducing pet insurance and you're actually potentially looking to divest your auto and home insurance book. So if that actually happens, would definitely be a big deal in the marketplace because they're not a small player by any means.
Yeah. And on my side, since you mentioned Lemonade, their stock price has dropped pretty precipitously from their peak. It's interesting to see what's happening. Of course, tech in general has taken a hit, so you might have to factor that out. Their stock peaked at $85 a share, and it's currently trading at $50 right now. And so they're down about 35 to 40%, depending on the day, from their peak stock valuation. And of course, some of this has to do with financial guidance they're issuing, and they're of course finding the brutal reality of being a publicly held company is there is a focus on this thing called profitability that's really, really important to the public markets in particular in difficult times. Now, I would say you probably need to consider that that a lot of tech has been hit fairly hard, and so they may just be getting lumped in with the rest of tech. I think investors are pretty savvy with Lemonade and understand that there's going to be a much bigger play coming in the future. Also, in the news cycle, of course, Root Insurance was tipped by Reuters to be prepping an IPO. So that's something, and I'm a big fan of Reuters news, and so there you'll see some more of these. And what's going to happen is we're going to continue to see some market validation on what private equity values a company at versus what the public markets are going to be willing to value an Insurtech company at, and that's really important because that's going to backflow into the private equity markets on the valuation deals. If the public deals are not supported then you can imagine valuations will come down in the private market. Also in Lemonade news, Lemonade's entering France. So just a little side note. That was reported on the 15th of September that they plan to enter France. They're gonna keep pushing for global expansion. Obviously, they have to keep pushing for revenue growth. So, again, we're rooting for Lemonade. We want them to be successful. We are talking about this. We remember we are rooting for all Insurtech to be successful. We want the valuations to be high. We want the market to support it. We also want companies to be profitable, right? Profitability, especially once you go IPO. You've got to reach profitability fairly quickly, or the market punishes you. And so, just please understand the context of this. That we want Lemonade to be successful. We want Root to be successful. We want these IPOs to go well because it's gonna bode well for all the funding rounds that are occurring in the private market as well. So that it's just some interesting news around Insurtech in general. Because there's quite a few other companies that would like to IPO in the next year to year and a half, and the market needs to support that. So that's just the little smattering of news that I saw as it relates to Insurtech. Pretty good week. Obviously, in broader news, I mean, what isn't news these days? It is a, I would almost call this like an overhyped news cycle. Like it's everything's big news. There's no boring days. There's no slow days. It's a very interesting time. We have a Supreme Court nomination going on. We have, more police news, and then obviously there's a presidential election. Of course, there's a lot of local and state elections, and I want to remind you that a lot of state governors, appoint insurance commissioners, and so with political change and turmoil comes change and turmoil in the insurance markets too. So don't feel like you can just stick your head in the sand and ignore who's getting elected, because the people that regulate the insurance markets get appointed as a result of a lot of these elections, and that has a big impact on our ability to expand and write business and build technology and function in these markets. And so really dynamic time right now. I think that's the nicest way to call it, a dynamic time, but certainly a lot to follow, Rob.
Absolutely. Yep. No doubt about it.
Yeah.
So election will be here right around the corner. And you're right. I'm glad that you call that out. Obviously ton of focus on the presidential election, understandably so, but yeah, those state and local elections matter. I know you were previously on city council there in College Station, and yeah, it's interesting, definitely appointments, but there's also elected insurance commissioners. I know California, for instance, has an elected insurance commissioner as well. So yeah, just encourage folks to get out there and vote, and to make sure that you do your homework and research all the races, because they all have an impact. And obviously, new voting rules in terms of whether it's, mail or early voting. It depends on what state you're in and all that. So I think you have to spend a little extra time to make sure you know what the rules are in your location. So, but yeah, and it's crazy that October is right around the corner. We're already in Q4. I keep telling people that, the year is slow, but can't get over this year enough, but the days are going by fast. So I think that's a reality for most of us. 2021 will be here before you know it.
Yeah, absolutely.
Can I comment?
Yes, absolutely, Zehra. I was just going to ask your opinion.
Yeah. So I did work on stock market prediction, as an academician, and I know it's just such a hard thing to predict. So, but I want to comment on profitability. We worked with a gentleman from Sompo, Japan. Actually, they were our first insurance customers, and he helped us so much in terms of developing our product. And once he told me, if you are going to do a fraud model, forget about a fraud model. Like, you're not going to have labeled fraud data. You should look at your profitability model. So we developed profitability and growth micro-segmentation models for detection and also for prediction. So as an insurance company, you actually need to find out, while things are happening, not 2 or 3 months down the road, while things are happening, you need to figure out, where are you exactly losing money? So if you say to a company, oh, you are not profitable, you are not really saying anything. I mean, I was once talking with a psychiatrist on autism, and he said, if you tell a parent your child has autism, there is not much that they can do. But if you tell them your child has difficulty communicating, especially verbal communication, then they know what to do. The insurance is just like that. So just, if machine learning our models can actually exactly pinpoint where you are losing money, and you are losing even more money in time, exactly where. And when you know that, you know where your problem is, whether it's a pricing problem, whether it's a competition problem, whether it's your agency, or it's a fraud or something else. So I really think companies should look at where they are losing money, where they are seeing losses with AI, and try to find out solutions that will solve exactly the pain, instead of just taking general measures. I just wanted to say that, and I'm so happy with the investments. Obviously, lots of investing is needed if you want to develop technology, and I hope that Lemonade and other guys they all do well, because I think insurance and finance, they are both very, very important industries for continuing our life, basically. Like, so many things depend on them. So hopefully things will get better, hopefully. Yeah.
Awesome. Well, thank you for being here today, Zehra. I appreciate you. And Rob, as always, great to see you.
Likewise, James.
Pleasure to be here. Thank you so much.
Thank you. This has been the Insurtech Geek Podcast, powered by JB Knowledge. It's all about technology that's transforming and disrupting the insurance world. I've been your host, James Benham. That's jamesbenham.com, with co-host Rob Galbraith. That's endofinsurance.com. Thanks to Jim Greenlee, our podcast producer, Kiara Dalton-Aro, our creative producer, and Adela Waldeck, our transcriptionist. And thank you for joining us today. We're taking you on a journey through insurance tech. So enjoy the ride and geek out. See you next time.